Hi, thank you for joining me here today. My name is Jeanette Andrada. I help private practice owners increase profit margins using tax and accounting strategies. Now, it's been a couple of years since I started working specifically with private practice owners, and there's a few things that I've noted that private practice owners tend to do, or some tend to do from the beginning, that end up being pretty big, costly mistakes. So I wanted to dedicate this video to talk about the top 3 accounting mistakes that therapists and private practice owners make when they're starting up their private practice. So the first mistake that I see time and time again is that a private practice owner is typically not set up on the correct tax entity. So there's different tax entities. If you are an LLC, you will automatically be taxed as a sole proprietor. Unless you elect to be taxed as a corporation. So there's also S corporations and C corporations. So there are different benefits to each one. But often what I see is that a private practice owner will jump in to become an S corporation, which tends to be very costly to maintain. So until there is enough profits to justify that, I don't recommend jumping into an S corporation unless you know that you're going to be very profitable your first year. Now, I have another video for S corporations that go into more detail and tell you exactly why you will pay more if you're not profitable. So go ahead and check that video out. The next thing that I've noticed that happens quite a bit, and this is not just specific to therapists or private practice owners, this happens across the board with any type of client that I've worked with, is commingling personal and business funds. So that's a huge no-no. That is something that you really want to avoid from the beginning. As soon as you start your private practice, make sure that you are opening up a business bank account where you are receiving any income and where your business expenses are going through. And so that's definitely something that could jeopardize your legal status. So if you're a PLLC or an LLC, that could definitely cause some issues. And it also creates such a headache trying to do a cleanup of your bookkeeping and accounting. And if you were to ever get audited, that's going to make things just 10 times more difficult on you. So just make sure that from the beginning, you open up that business bank account. And if you happen to use your business funds for personal purposes, just make sure that you are accounting for that correctly, and that you're not writing off business or personal expenses on your business tax returns, that you're not taking those deductions. So that's really important. And I do see that happening more often than not, especially the startup practices, when they're not really sure how everything is going to play out, and they're just kind of taking things one step at a time, and not really taking these things into consideration as far as the finances. The third thing that I see, and this is probably one of the most common ones, is that private practice owners typically do not have a good bookkeeping practice in place, and they end up missing out a lot on tax deductions. Now, I see this all the time, especially during tax season, because a business owner might just use an Excel spreadsheet, or they just might have, they might be just kind of mentally keeping track of what their expenses are and what their income is, or they're just going off of their bank statements. And that is a really easy way for you to miss tax deductions on your tax returns. So it's really important to have some type of bookkeeping in place. I recommend QuickBooks Online. That is probably my most used software, but it's the most used software for a reason. It does provide a lot of information for you, and it is a very, very useful tool once you get to learn how to use it. And I do recommend also having some type of bookkeeping process. Now, I have a free guide where you could download this for free, and it'll give you a monthly checklist and a weekly checklist for your bookkeeping. So this is intended for you to go off of and make sure that you are checking everything off, make sure you're not missing anything month after month. I always recommend to do your bookkeeping weekly, no later than monthly, because then after a while, it just starts getting a mess, and it's really hard to go backwards. And it's just adds so much more stress than is necessary. So yeah, those are the top 3 mistakes I see very, very often. And I really recommend that if you are doing any of these 3, that you if you, well, first, don't do them anymore. But if you need help in figuring out how to set up your process, or you need help in just knowing how do you handle certain transactions, then feel free to reach out. I will leave my link down in the description, and I offer, excuse me, I offer 15-minute strategy sessions. They're absolutely free. This is a time where we get to know each other, make sure that we are the right fit, as well as me giving you recommendations on what I suggest that you do in order to get your accounting back on track. All right, guys. I'll also leave a link down in the description for my bookkeeping checklist. It'll come really in handy whenever that way you don't have to think about what you haven't done, what you need to do. It's there for you in a checklist form. So yeah, let me know if you have any questions. Always feel free to leave a comment, and I will do my best to answer them in the next video. All right, guys, have a good one.